Alright, before we really get into it, a super quick but important heads up. Everything we're going through today is purely for learning. Got it? Cool. So today we're actually diving into a specific trading strategy and we're going to build it right on TradingView.com. So let's start with the star of the show, Bollinger Bands. Adding them to your chart on TradingView as a breeze. Just click indicators button at the top. Type Bollinger Bands in the search bar and select it. Your chart now has Bollinger Bands overlaid. Simple, right? You might be wondering, will this work on my market? Most likely yes. Bollinger Bands are incredibly versatile. Whether you're day trading cryptocurrencies, swing trading forex pairs, or investing in stocks, this tool adapts well. Plus, it's flexible across time frames. It performs just as effective on a quick 1-minute chart as it does on a longer 4-hour chart, so you can tailor it to your trading style. Alright, so you've got the Bollinger Bands on your chart, and you know they're super flexible. But what do they actually do? Think of them like a rubber band around the price of whatever you're trading. See these three lines? The midline is basically an average price over a certain period. It's kind of like the trend's heartbeat. When prices are generally going up, this line usually points up. If prices are falling, it usually points down. Simple, right? Now, the upper and lower lines, these are the bands. They tell us how much the price is usually moving or how volatile it is. When the price is jumping all over the place, these bands will spread out wide. But when things are calm and the price isn't moving much, they'll squeeze together. This squeeze can actually be a pretty cool signal. Now, here's the crucial point. We're not using Bollinger Bands in their standard way today. We're actually going to tweak them slightly to fit our unique strategy. So, open up Bollinger Bands settings on your chart and the inputs tab. We'll make a couple of quick changes. See where it says length? We're gonna bump that up to 100. We'll keep the type as SMA and the source as close. And the deviation will stay at the number 2. Based on these adjustments, whenever the price candles are above the midline, it generally suggests a short-term uptrend, and when they're below the midline, it's a slightly downtrend. But here's the thing, this alone isn't enough to make a trade. For our actual trading signals, we need a second indicator. This one is also free and it's called Breakout Finder. To add it, just like the Bollinger Bands, click the Indicators button at the top of your TradingView chart. Then in the search bar, type in Breakout Finder and select it from the list. Super easy. This indicator is really cool because it automatically finds those important support and resistance zones. You know, those levels where the price often stops and reverse. With this, you don't have to draw them manually, which is a huge time saver. It even gives you a buy and sell signals when the price breaks through these zones. But here's the catch. It can sometimes generate signals that go against the main trend. So we can't rely on its signals. We'll be trading based on these support and resistance levels and our adjusted Bollinger Bands. But first, let's do a little optimization on the Breakout Finder indicator itself. Head into its settings, go into the input section, change the period to 9, and then change the max breakout to 200. No other changes are needed there. So what are the exact trading rules now that we have everything set up? Well, it's actually pretty simple, even for beginners. Let me show you an example on this Bitcoin 15-minute chart. See this green line here? That's a support zone defined by our breakout finder indicator. And look, the price candles are currently below the midline of our Bollinger Bands. So we're looking for a sell signal. We'd enter a trade when the price breaks below the support zone. But here's the crucial condition. The breakout also needs to break below our lower Bollinger Band. Why? Because that gives us more confidence that this breakout has some real strength behind it and might actually reach our targets. Since the price in this example did break below the lower Bollinger Band, that would be a valid sell signal. So we can open a short position here. For our stop loss, you could set it to the midline of the Bollinger Bands or even the most recent swing high. And for your target, we're looking for 1.5 R, which means 1.5 times your risk. Now let's move on to the next example on the chart. Now you can see the price is above the midline. For a buy trade, it's basically the opposite of what we just talked about for a sell. We're looking for the price to break above a resistance zone. And the breakout also needs to break above the upper Bollinger Band. That would be our signal to go long. Your stop loss would be at the middle line or the recent swing low, and still aim for 1.5 R as target. But here's the final note, and this is super important. We're never going to enter a buy trade if the breakout couldn't break above the upper Bollinger Band. And on the flip side, we do not take a sell position if the breakout couldn't break below the lower Bollinger Band. This extra confirmation helps us avoid weaker signals and keep us focused on high strength moves. Now, these are the trading rules, but honestly, the most important part of trading, even more than the strategy itself, is risk management. It's how you protect your money and stay in the game long term. And I've actually created a full video breaking down everything you need to know about risk management for beginners. So make sure to click on the video recommended on the screen right now to check it out. Seriously, don't skip it.